Hey everyone, welcome back to Mortons on the Move. I'm Tom.
And I'm Kate.
And today we've got something special for you. We are talking RV financing. This is not something we've covered in the past, honestly, because we're not experts in this. But we met a guy, Jeff McLeod from Newcoast Financial, at an RV show recently, and he was a wealth of information. So we actually met up with him again later with a digital meeting to gather a bunch more information, and today we are rolling that entire interview with you because it's fantastic.
So if you're thinking about getting an RV or trading in your RV for a bigger one or different one, and you're going to be financing, or if you're thinking of refinancing your RV loan, which is a thing, this is a great video to watch the whole thing. And like Tom said, it's a very long video. It's over an hour, but we're gonna do what we can to help you guys out. We have chapters and timestamps laid out in the description below, and we also have a blog post that has a breakdown of everything that we're going to talk about. So Jeff has been in the RV financing world for decades, and we really connected with him because he said a lot of things that we kind of already felt about the RV financing world, that there's a lot of unknowns, you kind of felt like you're taking advantage of, and he really doesn't want that to be the experience for the end consumer.
We're going to be covering different types of financing, whether you're going through a dealer, your local bank, or an RV specialist like him, financing older or used rigs. I didn't even know that was possible. What lenders are going to look for in credit scores, what information you're going to need ahead of time, how to basically be prepared when you walk onto a dealer lot so that you honestly don't get taken advantage of during the loan process, because there's a lot of people out there that are trying to make a big profit on loans. Now again, this was just a video call that we had with Jeff to gather a bunch of information, so the resolution isn't great, but the information is. We're going to be providing Jeff's contact information below as well, and at the end of the video, so if you have any additional questions, you can contact him, leave them in the comments below, click on the link and check out our blog post along with this as well. So without further ado, let's get into it. So I guess to kick it off, though, I think I would like to just kind of ask for you to just kind of explain who you are, why you're, an expert in this field.
And then also, who is Newcoast Financial?
Sure. So I'm Jeff McLeod, and I represent Newcoast Financial Services in Oldsmore, Florida. And we are a consumer loan originator finance company. Our parent company is Marine Max, which many people out in the boating world would be familiar with that company. And so we've been around since about 2000. So going into our 25th year, sounds kind of long. Personally, I have been with Newcoast for 9 years coming up. But my overall experience in this RV finance lane, if you will, or wheelhouse has been, gosh, I hate to say that, 30 years. But when you're having fun, as they say, time flies. And during that time, I started out working with Thor Credit, and many people out there will be familiar with Thor Industries, and we were a captive finance company supporting the Thor dealer body, and started with that brand new, and went out and opened up dealership relationships at that time. And there were 4 of us who started and kind of combed the country in our geographic territories. And so that was basically how I got my start doing this and working on the dealer side of it. Whereas now, today, with Newcoast, I touch some dealers, but I touch a lot of private, as we would say, driveway to driveway customers and clients that are selling privately. Factory direct would be another example where we work with major factories that don't have a dealer body. Consumers just buy directly there, and so we facilitate the financing with that. And the third would be with broker relationships as well. So in this role, we are definitely interfacing and touching with interfacing and high touch with the clients. I think when we spoke before, I mentioned that a lot of times people will get frustrated by going to a local bank or a credit union only to find out that, oh, it's an 84-month term or it's a high interest rate. And so that doesn't really work when you're buying a rather expensive, 5 or 6 figure motorhome or travel trailer.
Right. And that experience is exactly why we wanted to take this opportunity and really deep dive into this area with you, Jeff, because we honestly aren't experts in that area at all. And so if you would just humor us and our audience here to kind of start from the very beginning of like how to finance an RV and what your basic options are and some of the basic terms and how those are set up so that, start talking about things like interest rates and terms and stuff like that. We kind of have a baseline understanding of where we're going.
Okay, great. A call comes in and somebody has selected, let's just say a motorhome in this case, and they're interested in learning about what do they need to do to get the process started? What kind of rates are available? What kind of terms? And so what I do is first thing I ask them is, tell me a little bit about what you're doing, and we'll start off with what are you looking at, and I'll collect that information. So make, model, year, all of that's important, to get us to that final conclusion. And the reason why I want to know that is because I want to value the collateral, and I also want to know the year because that would affect an interest rate too. And I'll explain a little bit more as we get into it. And so at that point, we look at what they're going to pay for it. What is the purchase price going to be? So let me explain on the purchase price what a down payment would be. Usually up to $100,000 purchase, you're looking at a 10% down payment of the total of the price and the sales tax added. So we add this, whatever your local municipality or state sales tax is, we add that into our formula or calculation, if you will. And then if it's over 100, say 100 to 150 to 200, we're going to look, I explained about a down payment requirement of 15% down. And then 200,000 and up, generally we're talking a 20% down payment. And those are just basic down payments. I tell the clients, of course, that is the minimum. You're welcome to do whatever you want. And oftentimes they do that, but it's a good idea just to give them the base requirements, and then they can choose if they want to put more down. From there, we talk about terms, and most of the time, and my average loan amount on a transaction is about $150,000. Now that takes into account the $30,000 travel trailer or used fifth wheel, all the way up to, we go all the way up to Prevost and Newell coaches. So, but the general thought is we're right in that average about 150. And so explain to them, what type of term is available. And as an example, on a $50,000 loan or more, a 20-year term available. And so most don't know that, and they're surprised. And most, generally their comeback is, well, I'd like to keep the payments affordable, and then I can decide without any type of penalty, I can pay extra down as I feel comfortable to do so. So that's what most people would do, lock in a low payment and then pay additional principal every month and pay that down quicker.
Sure.
Interest rate is a very important driver in this. Interest rates are determined by your credit score. We'll talk more about that in a minute. They're determined by the value of the collateral, and they're determined by the amount of money. So how much is the loan going to be for? And by that, I mean, and this is kind of counterintuitive to what most people think, but a larger loan is going to get a better interest rate. And so presently today, rates are as low as 6 3/4, but that's going to be like on collateral that would come in about 150 up and go up from there. So that's where you're going to start seeing the better rates. So I explained that the smaller loans, the rate goes up. Also, some lenders require, a tiering system on your credit. So they look at your credit score. And as an example, an 800 credit score is going to get you what we call super premium interest rates. And then as you start moving down to 750 and up, that's a premium. You go down to 749 to 720, that's going to be kind of in the C tier, if you will. And then maybe down to 7. And then anything below 700 is going to be that 4th tier. So the lowest, the highest tier with a higher rate. So it's always important to know, even before you shop in a dealership, you should know what your credit score is, because when you navigate through a dealer, oftentimes you may not be prepared, and you could very quickly make a decision because you see something that's exactly what you want, and it's exciting, and you kind of get under that euphoria of it. And then, I don't want to say you could be over exuberant, but sometimes it happens. But the more information you have before you go shopping, the better off you're going to be as a consumer to make sure you're getting what prevailing interest rates should be for a credit score that you have. And you can always get a free credit score, by the way. Now, there are differences, and I'm going to go off a little bit. I'm not going to try to get into the weeds here, but this is important.
Yeah, no, this is great. And let's do credit score 101 here.
Yeah, exactly. So I get people tell me all the time what the credit score is, and I have to say, well, where do you get that from? A lot of people say Credit Karma. Credit Karma Credit Karma is set up to give you a look at your current accounts, but it's a Vantage score. And a Vantage score is different than a FICO score. A FICO score is the real McCoy. That's what lenders base their decisions off of. Now, in the FICO world, you have different versions of FICO, which even gets more complicated. But just keep in mind, you want to be looking at a FICO version 8 or a FICO version 9, because that's what your lender is going to be basing their decision off of, and pricing the loan off of one of those two versions. So
where would you get that? Is that something that you can get through your local bank, or is that something that you would talk to?
Yeah, great question. You can go to annualcreditreport.com, and you're allowed to get one free bureau out of the 3 from all 3 reporting agencies: Experian, TransUnion, and Equifax. With my credit union, they offer me a free credit score every month, and it is a FICO score. So when I look at that, I know that's what a lender would go by if I was going to be applying for credit. So just make sure that you know the difference between a Vantage and a FICO. They grade different things. Credit Karma is, if you do have that, it's more of an upsell on different products. They're always inviting you to apply for loans and credit cards and things like that. So it's more of a marketing tool as opposed to a FICO bureau from Experian, TransUnion, or Equifax. It's giving you a more concrete description of what your current credit is like. And they grade different things. So if you ever wonder why I never missed a bill, why is my score a 710? Get that all the time, right? Guess what? If you use a lot of revolving debt, credit cards, that's going to bring your score down. When you start maxing out credit card limits, say if you've got a $10,000 limit on a Visa card and you're right at 9,500, that's going to impact your score. So you're almost at the high limit. So you want to try to keep your balances, if you can, below 50% of the high credit. Another thing that lenders look at is your comparable credit. Now, we're kind of threading this all back into interest rates, right? Because all of these things go into your loan decision and how your credit score is achieved by these different characteristics of your credit. So installment credit is very important to have when you're out there trying to buy your first RV loan. Now, again, it depends on the loan amount and how much you're trying to borrow. But on a bigger loan, they're going to want to see comparable credit. So that means something that you've done in your past. It's been not necessarily the same dollar amount, but getting into that neighborhood. So they're going to look at mortgages and stuff like that. And then, so we call that comparable credit. And we like installment debt too, as opposed to revolving debt. Now, revolving debt's not bad, but it all goes into the pot together to achieve the score. But you want to have a mix, and you don't want to have a lot of reasons why people get declined are maxed out credit, high debt to credit limits, and then high debt to income. Because, quite frankly, you've used up all your credit, and your outgo is now over 40% or 43%. So we take a debt ratio and we take your gross amount of monthly income from all your sources, and we take your outgo and we divide that and come up with a percentage for your debt ratio. So you want to make sure that, you might be puzzled. Why am I getting turned down? I make plenty of money, but the bank looks at it differently, and they like to see a debt ratio right, pretty much max at 42%. So that's going to be your total, payments per month divided by your income.
So as you're talking about this, I'm actually thinking in my head, like, when does the process of like thinking about RV financing actually start? And like, if you have to do anything with your credit, or if you have to like make modifications, this process shouldn't start when you start, that first day you walk onto the RV lot, like, I'm going to buy an RV and I'm going to figure it out from now forward. Right. It should actually be like a few months at a time of kind of preparing this and making sure you've got your ducks in a row.
Or at least knowing maybe what level of credit you actually should or could use, right?
So is that like, could somebody come to you ahead of time and say, hey, I want to make this purchase, I don't know, 6 months from now, next year? Like, is that a good time to start talking about this? And do you see people coming at that time, or do you see them coming like, I have this RV, I want to buy it now?
We see both. I have a crystal clear example for you. A gentleman called 2 days ago, working with one of our brokers, and found the 2012 Vesta, which is a really cool coach, by the way. It's made by Monaco. Very streamlined looking, but they don't make them anymore. But so he's in New York. He wants to come to Florida, but before he comes, he wants to get qualified and not make the trip in vain. So, we went ahead and got all of his information and went and basically got him approved before he came down here, and gave him his interest rate, his term, his payment. So he had everything he needed to know before he went and bought that RV. So when he gets to Florida, now the only thing he needs to do is have an inspection done, because that's what he's either going to inspect it or he'll get a third party to do that. But to your point, he's not going to call me when he gets to Florida and says, oh my God, I found this RV. What do I need to do? He knows now that he's got everything in place. Another example would be when people are further out than that and they want to get a pre-approval. Well, we don't really do a pre-approval. We do a what we call hard approval. So we say to them, well, what are you looking at? And if you haven't found it yet, we can use an example coach or trailer to get you a hard approval. And so what we would do then is go through the same steps, get information, get application, get collateral information. Depending on the loan size, if we needed financials like proof of income, we would collect that at that time too. This person could be 60 days out from buying anything, but we've got a hard approval, we've got an interest rate, we've got a payment, we've got a term. So now they're locked and loaded. And they may end up going to a dealership, which they can finance wherever they want, but normally when they get to the dealership, it's easier for them just to go ahead and, take care of it there, because the dealers are resistant to outside financing. So that's just a fact of life. It is what it is. But We give them great information, and we tell them, hey, look, this is your interest rate. And when you get to wherever you're going, and it turns out you might go in a different direction, don't pay more than that rate. So it protects them to have that information.
Yeah.
You go into a dealer, and I'm not beating up on dealers, trust me, but you just want to know, like, what seems perfectly reasonable to you when you're in like the euphoria of buying an RV and going in to sign a bunch of paperwork. In turn, it might not be. Maybe you could have done a little better, but you should know what you can get versus what you might be signing for. And all that does is help you negotiate a little bit better financing package.
Yeah. And this was one of the things that I know we both really liked about talking with you, Jeff, is you kind of shed a lot of light on that, because we've all heard like the horror stories or like the worst case scenarios coming out of some dealerships. And yeah, you kind of get in that euphoria, or maybe you haven't, you find the RV, you get excited, but you haven't, done that, 60 days, 30, couple months of research and preparation for that moment. And you can kind of be taken for a little bit of a ride if you don't know, what is a good rate, what is a good term, what is a good deal, what am I actually qualified for, and what like a dealership might upsell you or wrap into those loan terms. So could you talk a little bit more about that, and maybe like, going through a dealer financing versus, your local bank or RV loan specialist like you guys?
Yeah, so I think that the local bank where you might do your banking, that would be the outlier, because, I would say probably 60-70% of the time, they're not going to have an RV program that would be specific. Now, they may say we offer RV financing, but I can tell you I belong to a large credit union here in Central Florida, and I've checked out their rates, and they're 3 or 4 points higher. Their terms aren't as good. So that's probably not the best use of using your credit union or your local bank. Another example would be, some of our lenders are national lenders, and you might see them brick and mortar in your local, town where you live or city. And you might walk in there and say, hey, I want to get an RV loan, and I'm buying this RV. And they'll say to you, we don't do RV loans. And then on the other hand, we work with a specialty group within that bank that does do RV loans, but we have that connection. It's not at a brick and mortar level. So, and by the same token, some people find large credit unions that are geographically located that give a traditional RV loan program. So, that's just something that you might, if you want to check that out and you have a relationship like that, by all means. It's just another tool to shop against, what else is out there, whether that's me or the dealer. Again, like I was saying, a lot of times the people that come to us are not working with a dealer. So it's pretty cut and dry. We give them all the information right up front, tell them everything they need to know. It's nothing like, again, we don't need your driver's license, like we talked about before, just to walk in and talk to me. At a dealership, sometimes there's a gate, there's a fence, you got to go in through the front door. What are you here for? Can we have your driver's license? And in the meantime, you're getting a soft credit pull or something going on, and or they want to pull your credit before you go on a test drive. And so that's okay if you found a new unit or a used unit you want to buy, and you're prepared for that. Just know that's just part of it, right? And then after that, it's a process in there where you get taken through, right? So you find the unit, you test drive it, you go through a negotiation back and forth, and then you go to the finance office. And then from there, you're going to get a payment. You're going to get a payment wrapped up with stuff in there that you may or may not want. It's called menu selling, so that happens too. And to be perfectly transparent, we offer our clients extended service contracts because, that's something that they might want to know about if they're buying a used diesel motorhome, which one thing could cost 25 grand to replace something or pull the engine out or whatever. But just know what you need and know what is comfortable for your budget. And that's what I would say to people. Don't feel forced into signing for anything you don't feel comfortable with. And make sure so much fine print, you know, in these buyer's orders and these agreements. And make sure you see like prep fees. What does that mean? How come when you have an MSRP, a lot of those extra additional fees should already be in the MSRP. Should not, you know, a dealer fee is pretty normal everywhere. But, you know, you might see like walkthrough fee, I don't know, but they have these different names for them. But they're additional fees. And so you think you're getting a great price on an advertised RV, and now you're getting bumped back up to the price again because they've got these additional charges on there that, you know, probably are already accounted for in the MSRP, the factory MSRP. And then I see so many times, like I'm very active on Facebook with RVers, and I just like to be there to kind of get a pulse of the market, see what's going on, see what people are saying. And the number one thing I always read about is I bought this RV, I put down 20%, now I owe this much on it. I signed everything. I didn't even know I got this. I didn't know I bought that, but I signed. So take your time and understand what you're signing. Anybody puts something in front of you, it says sign here, you know, hang on a second, you know, what are you signing?
Yeah.
We're definitely read the contract, people. And if you don't understand it, don't sign it, because we've seen the same exact thing. I saw something post the other day. I bought an RV. I thought it was 80,000, and by the time everything was done, it was 110 or something. It's like,
right. And don't forget, you know, when you look at a finance contract, you have what's called Fed boxes, and you start out with the interest rate, you start out with the finance amount, you start out, and then it goes down, you know, left to right. Shows amount finance charge. That's if you made every single payment. And then they add your cash down in there for the total amount of that purchase. Focus on the amount finance, okay? So you get a buyer's order or a purchase agreement, and it says, you know, $100,000. Now if you live in Florida, you'll have a doc stamp. So just account for that. It's I think it's 35 cents per $1,000. So that's not a big deal. Florida is going to get it. It's going to be in there. It's nothing any of us can do about. But then if you look at the financed amount, and it's like you just said, Tom, you know, another 20 grand higher. Time out, you know, how did that happen? Because maybe you signed, you didn't realize what, you know, a favorite thing is it's only going to increase your payment, you know, $7 a month or $12 a month. And that's almost reasonable, right? But you don't see what that premium is. It's on there, but it's kind of
like 20 years and $7 a month suddenly is a lot more.
I mean, let's face it. The interest, which is definitely a profit piece for the dealer or anybody, is the cost, your price to finance, right? It is. Yeah. You have to think of it almost as like this is the dollar amount that it is you're paying to get this benefit of having the RV now, right? So
either you pay cash, and then you don't have that charge, or you finance it, and you do. But you know what's interesting? Even on like a 20-year term, I mean, it's big. I mean, I've seen it. You know, the average loan on the books is like 54 months. It's not even, you know, they're either trading up, they're trading, they're getting out altogether. An unfortunate circumstance, whatever the reasons are, the average loan stays on the books about 54 to maybe 60 months. But so I wouldn't get worked up over that unless you're planning on making all 20 payments or 20 years of payments. 240. That's just put that out of your mind, you know, because it is what I mean. Go look at your mortgage that you finance on your house, and it's the same thing, right? And we're all probably paying those off in 20 or 30 years. We're not in 5, you know. So, but you know, if I could say anything right now to somebody looking at what they're buying, If you buy extended warranty, that's fine. I've seen them pay for themselves, without a doubt. And that extended warranty is $9,000 for a 5-year policy. Then that should comport and jive with the amount financed, But know what you're signing for, know what each item costs, and then make sure that amount finance turns out to coincide with that. Again, this just goes back to kind of taking your time a little bit ahead of time, and when you go into the store, don't be pushed, don't be rushed. There's always going to be another RV. I know that for a fact because I've worked so many. Now, and that's even more obvious on new, because they didn't make just one new of that, model. They made thousands of them, so you can always get the one you want. But on used, I've seen deals come apart because people get to where they're going to, and the inspection didn't turn out the way they wanted it to, so they pass. And used is more unique in a way because you found that very unique 2021 Allegro bus 45 OPP with this mileage, with this options, with bath and a half, just the way you wanted it. And so it might not, you may not just go, it's not like you can run out and duplicate that coach right away. And so, but I always say to people, there's always going to be a better one and another one. And it turns out I haven't been wrong about that. I mean, I'm not bragging, but it just happens that, it's better to skip on something that is just not, could end up costing you a lot of money.
I think that's really great advice.
We actually, the RV that we're in now, we found this coach, and it's a very unique layout, and we loved it. We found it here in Florida, and same exact thing. It was like we tried to kind of move on it, but it just wasn't like,
it wasn't lining
up, and it was a little difficult. Well, a couple months later, sure enough, we came across basically the exact same layout and model. It was on the other side of the country, but we were still willing to make that work to get it. And
many people do that. Yeah.
Well, and there were things better about this one than that one. And at the time when you're so in love with an RV, it's really hard to be like, oh, there's one out there better. But I think to your point, there is, and you might just not have found it or knew it was out there.
You're always going to find another RV. And oftentimes, I always say if it's meant to be, that's what our mom and dads used to tell them. It'll be. And if it's not, it's not. And there's a reason why you didn't buy that particular RV, even though you wanted it. And, your this other part of your brain kicks in and you want to kind of justify maybe bending a little bit and accepting it. But then the reasonable part tells you don't do it, and you don't, and then you do find exactly what you want in the condition you wanted it.
Sure. So I want to kind of expand on that a little bit of how the RV impacts any sort of financing or loan terms, the differences between a new or used one, or drivable versus towable. Are those things that go into some of these finance calculations?
How old of an RV can you even?
Yeah.
Well, yeah. So most of typically 15 years old is what you can find to finance. So we go back 20, but let me, this is a great topic. Rates, if you want to get a great rate, new rates are going to be in that new category. There's a couple different ways to go. Now we have some lenders that will charge a quarter higher point, as an example, on anything that's 2 years to 3 years old, and then 3 years to 5 years, they go up another quarter. That's just one example. We have other lenders that give you the same rate on 10-year-old coach as it were a new coach. So if you're on a 2015, whatever, let's say, I think in terms of motorhomes, I know your audience is very broad, but whatever it might be, a 2015, then that unit year is still eligible for whatever the new rate would be in that tier category. So if I'm an 800 credit, super premium, I want to borrow $75,000 and it's a 10-year-old unit, and I would get the same rate as though I was buying a brand new 2025. that would be another. That's why we like to underwrite the deal from our standpoint, because we have so many varied options where we can go that is really kind of a custom fit, if you will, for an individual. Or not, we're not like one size fits all. We have options. And so that's why we like to offer people. But, and we talked about this before, if I just go to my own bank, that's all I'm getting to look at. What else is available? How about if I put more money down? Do I get a rate break? With me, you do. I have one lender that gives you consideration for score and we'll talk about LTV in a minute because that's important. So there's different options available. So we go back 20 years. Typically, most of what we see is 15. If you go all the way back to 20 years, expect this. They're going to take a NADA guidebook evaluation, and they'll look at the wholesale value of it. And we just got a gentleman on a 2012 I mentioned earlier, the Vesta. So that, as I remember, had an average trade-in wholesale value of $68,000 and change. So a lender would go up to that amount on a 2012. Let's say if it was a 2015. Instead of going up just to that 68,000 and change, a lender can go up 10 or 20% above that because it's newer and it's the collateral. In a bank world, it's all about risk. How do you manage risk? So newer, less risk in their head. So, you're going to get a better advance. What we call an advance is what they'll lend on it.
Gotcha.
Does that make sense?
Yeah.
And you should know that. And then rates are going to go up on anything 10 years and older. Again, we go back to the dollar amount. Rates will be determined on that, and rates will be determined on your credit score. I often tell people, if they come to me and they tell me what they're getting, and I may not even finance it, but I give them all the information. Because you know what? They talk to people, and I'll get a referral back. It doesn't hurt to be nice to people. I will tell them straight up, you're paying too much for that coach. The NADA retail is $165, and you're paying $180. I can't see a case where I would ever pay that much more over retail NADA.
So I want to ask a little bit more about NADA because we get asked about the determining camper values, for anybody trying to sell or buy, how do you find that Kelley Blue Book value for an RV? And we have written NADA before, but if you could expand on that, as that's kind of like the gold standard of RV values, right?
Yes, it is. So there is, like in the auto world, there is a black book for wholesale auto values because there's so many transactions going through an auction. RVs just don't have that kind of volume, to create a black book. So the NADA guide, now we don't have the consumer version. We have a paid subscription, same as what the lenders have, and that's what we look at. Sometimes they're pretty close as the consumer version, which you mentioned, Kelley Blue Book, or there is a JD Power consumer one where you can go online and access that. And sometimes there is a difference. But the version I look at has average trade-in wholesale, and then you have retail. So all your lending is going to come off of average wholesale trade-in, whatever that number is. And then if a borrower is like less than prime, say he's got some bumps and bruises and maybe some dated credit issues, they may just give that number and that's it. If somebody has excellent credit and is an 800 score, has a 20% down payment, then that is the case where you look at that NADA wholesale trade-in number and they'll go 20% over that. So if my average NADA wholesale trade-in is 100, then the bank would loan me 120 on that. What I guess the best way I can describe that is like, get an idea. There's really no way to get as a consumer access to what I see. Right. But I do share that with people. If I think that when I get a driveway to drive, I'm not trying to kill anybody's, sale, but I need to get my customer financed. So
Sure.
I got to let them know this is, we're not going to get that much bought. If you can buy, you can pay whatever you want for it. You're going to put more money down to bring it into that wholesale trade-in plus 20% value.
Sure.
Hey, one thing that that I forgot to mention, but when we go back and we talk about, Tom, you asked me about, different collateral and years and how far we go back. A lot of times people might end up going to their own bank, and the bank does try to evaluate the value, come up with a value. And there are lots of, well, not lots, but there are quite a bit that are not listed in a guide. And that's something where we actually fit the bill because we can get comps. So an example of that would be like a Prevost Liberty Coach or a Marathon or a Newell at that end. It also could be something also, a lot of these B series vans, the Sprinters are coming out now, and Panoramic is one out of Canada. There's no Panoramic in a guidebook. There's other ones too. So as long as we can find 2 to 3 comps of the same model and same year, and we go by what it's listed for online, we can use that to come up with a valuation. So comps is something we work with a lot too.
From a perspective of somebody looking to buy an RV, it sounds like choosing to go through somebody like you, and I'm not using this as like an ad pitch or anything, but like compared to like using a dealer or something, they're getting a lot more protections in a way, both in the like if somebody can't get finance for something, that's actually not necessarily a bad thing, because it probably means that the risk to them and you is too high, right? Everything's about risk in here, and we don't want somebody financing something that they can't necessarily afford. I guess I'd like to step back to that briefly. I know we talked about that a while ago, but when you talk about getting frustrated about not being able to get finance for something for whatever reason, like that isn't necessarily a bad thing, right? Because the bank is in their interest, but also in the consumer's interest that their risk is too high.
Correct. And whether you go to a dealer or a person such as me, those lenders are generally the same lenders. So they're going to analyze the risk the same exact way. And they want to make sure you're going to be able to afford it and pay for it. And you might have a great credit. I see it all the time. You may have a great credit score and paid every bill in your life, and you don't understand, well, how come I can't get this? The best thing to do, I think, is, as we talked about before, I like to say no before you go. You can go online and just pull up free a loan calculator. And if you think, hey, honey, we want to spend $1,000 a month for an RV payment based on, what we have now, we have a mortgage, we have a car payment, we have a couple credit cards. This is how much we make. We're comfortable with $1,000 a month RV. So go see how much that will buy you, and go into a loan calculator, put in $1,000 a month, here's a good tip, use a prevailing mortgage rate. If you're not sure of what, if you don't get me first, or you don't get a rate quote, kind of model it on a prevailing 30-year mortgage, because they're right kind of in the same neighborhood in general. Now, there are exceptions, like I said, with older RVs with lesser amount of money, where the rate could go up a little, they could fluctuate. But that'll give you enough information and back into how much RV you should buy. That way, when you go shop, you understand, well, we want $1,000 a month payment. We'll do a 20-year term, and we want to, let's say right now a 30-year mortgage rate is 7.49 ballpark. Plug all those variables in. It's going to give you back a sale price and an amount to finance. And then when you go shopping, you have an idea of what you want to look at and what price range. Don't be a payment buyer, okay? Because do not get sold on a payment. Don't do that. If you have a trade-in, be a difference buyer. So doesn't matter what you give me, doesn't matter what I buy your coach for. I want to pay $40,000 plus my coach. And so that's a great way to not worry, because you can get, if they're starting out at a list price, okay, and they're giving you like this big number for your trade-in, that may not be great. So work off a trade difference, because that's the number that you're ultimately going to be basing everything.
Payment buyer, you mean looking at what you can afford each month via the payment versus the actual cost of the RV, right?
So, I should be a little more clear on that. Yeah, find out, what your budget will tolerate, but use that as a way to determine how much coach you want to buy. If you go right in and tell somebody, I'm gonna pay $1,000 a month, there's a lot of stuff that can be added in besides the RV, to get you to a payment you just told somebody.
Yeah.
Yeah. No, I think that's a really good point. I was going to ask you, like, what, in going in and doing that negotiation with a dealer, like, what are the things that you should hold close to your chest and not,
right
out there, and what should you be sharing with that dealer?
Back in the day, and they used to call it the Foursquare. Maybe they still do, but you'd have price, trade, payment, maybe cash down. I forget. Anyway, the minute you volunteer a payment, then they're going to work everything to try to get to that payment. Let it all kind of flow down, and find out, once you select a coach and you determine that you want to put 20% down or 15 or whatever it is you want to put down, then, look at what that bottom line is. And then if you want to add on features like extended service contracts or road tire and wheel protection, then do that once you know what the base is. Don't get a payment that includes all that. And then you're like, well, we can afford that payment. Make sure what are you looking at and what's in that payment.
I'd like to go back a little bit to talking about buying used as well, the driveway to driveway that you spoke about a bit more. I think that intimidates a lot of people as a whole. We are huge proponents to buying used. We think that you can get a lot more for your money doing that. But I think a lot of people are more shy to do that because of kind of the complexities or the sort of scariness of, there's a lot of scams out there. There's a lot of challenge to it. I guess if somebody was interested in buying used, like you talk a lot about that's what you do. How can your services make that easier for somebody?
Yeah, I love talking about this because it's a lot of what we do. But I think our process is very ironclad, and we don't want to get, because you know what, we can get hurt too. We don't want you, the client, to get hurt. We don't want the seller to get hurt, and we don't want to get hurt. And that can all happen in a nefarious transaction. So you come to me, you found the coach you're sitting in right now. So what we do is, in the beginning, we just go through the same things. What are you looking at? What you're, so on and so forth. I'm going to email you now, and there'll be a link below my name. Do an online secure application. We get the app in. We'll go through the approval process, get you approved, make sure you're okay with that. No obligation if you're not. Here's what it is. And then from there, if you're ready to move forward with that, move to closing, we probably would recommend, or you get an inspection. You might want to think about that. A lot of guys and ladies tell me, you know what, my husband's a diesel mechanic. He's an over-the-road truck driver. We know what we're looking for. Others will say, yes, I'm getting basically a complete inspection from a third-party, independent, certified inspector, just like you would on your home, like the bank would require. Banks don't require inspections. They do require collateral verification. So that's a piece here in a minute I'll tell you about, which is a part of that leg on the chair that we keep that chair balanced, right, on the purchase. So, and then we ask you, can you provide us the name of the contact? And we have the contact information of the seller, email, phone, and so forth. And we're going to reach out to them now and explain who we are, and we're facilitating the financing. And so we'll make that call, and we'll get with the seller, and we require the seller to send us a copy of their driver's license, a copy of the front and back of the title, and we look to match up that to the guy selling it. The name and all that is going to match. We're also looking for liens. We want to make sure there's no outstanding liens on it. We also get a copy of the current registration. So all of these things have to line up together to make sure we've got the ID, we've got the coach, and we've got the registration. So everything here now is legit. And we're green light, we're going forward here. If they have a payoff, we send them a payoff authorization. They fill it out, they send it back. We call and get a 10-day payoff. This is where a lot of private people get tripped up. They're like, well, the guy's got a payoff and I've got to pay cash because his bank or his credit union will not release the title. And so it really upsets the whole deal and basically makes it unless you want to front the cash to buy it, and it's pretty difficult to happen. And that happens. So what we do, we'll make the payoff. So don't feel like if you find a coach that has a payoff, that's going to stop you from making the deal or making that purchase. And we instruct that lender to send us the title. So that's one thing. By the way, all the money comes through us like an escrow. So let's say when you bought your motorhome and you financed it and you had a $35,000 down payment, we're going to get you to wire that to us. And I've got a great example I'm going to share with you after I finish this. It's crystal on what we're talking about. And so that money's going to come into us. And then we organize and we use a third-party vendor, collateral specialist, and they have agents all over the country. They'll actually go out and photograph the coach and verify the VIN number and the mileage. So we got that now too, and the lender requires that. And we have to charge the customer for that, but nobody ever objects because it's just part of, the guideline for lending. And so at that point, we're ready to close. So we're sending out docs to the buyer via email to sign and notarize. And we're sending out seller documents to the seller to sign and notarize. Once that all comes back in, we have everything we need to pay off the lender. We have the down payment we've collected from the buyer. And now we're ready to disperse funds just like a title agency would on a home mortgage. So it would be tough to try to, do something on the down low to try to commit fraud.
Sure.
And let me give you an example of why this is so important about us collecting the money. 2 weeks ago, a gentleman out of Florida found a coach up in Idaho. It was oh my gosh, it was a Dutch Star, a 2014 Dutch Star or something. Anyway, so the seller was way up in the hills and the mountains of Idaho, and it was a kind of a challenge communicating with him. But anyway, our customer was going to fly out from Florida to Idaho, and we said, okay, that's fine. We're sure you don't want to go twice, so let's get your loan funded, collect the down payment from you, get all the documentation. So now we have a funded loan. We'll hold that money in escrow. You go to Idaho. He was going to fly up on a Friday. He was going to meet his inspector there on Sunday. And if all went well, we would go ahead and wire Monday on his okay in writing. And so he got there, and just before he was going to board to leave Florida, the seller calls and says, well, there's a couple of things I think I should tell you about. The generator's not coming on right now, and this and this. And our guy was kind of disturbed about that. And I think they agreed to go ahead and do the inspection, and the seller agreed to fix some of these items. But then even before our guy went out there, the seller came back and said, I'm getting tired of this. I don't want to work. And this is the seller telling our customer this. He doesn't want to take care of things that he said he would. And why that is an important example is because we refunded our customer his money, his down payment, and we flat canceled his loan agreement. And so he walked away without getting hurt. What if he had wired that money to this guy who's kind of being hard now to deal with? How long do you think it would have taken him to get his down payment back from him?
Yeah.
So that's a great reason why, we do what we do, because we're kind of the hub of it, and we want to control it, because we don't want to we have been burned before. A couple of years ago, we got burned bad. by a ring that was going around, with identity theft, perpetrating buyers and sellers. And we got fake inspections and everything. So we really clamped down and even made our process more iron tight, airtight.
To show that, there's scams everywhere.
We have seen some incredibly sophisticated scams go through, so it is challenging.
Having that peace of mind, like you said, like if there's a
having a third party that just maybe sees this more often than an individual buyer, to me is a huge peace of mind. So
I believe that is true too, because there's just so many chances for things to go bad. And you know what? It's not necessarily fraud either. It's like you get to see the coach and you're ready to take it. And we had a guy come down from Hilton Head to Lake County to Tavares or somewhere. And the coach, the pictures were beautiful online. It was listed with a broker and all of that. And he got there and like their dog was laying on a bed in there, and the shampoo bottles were still in the shower, and the coffee maker had coffee in it. He's like, I'm not taking this, coach. And the whole thing just totally soured him. And he walked out and he goes, I'm done. I'm not buying it. And guess what? He's driving back on Saturday. This was a Friday. And he found another coach and he turned around and went back down to Lakeland. And so like we were talking about before, there's always another coach.
Gosh, remember that coach we looked at here in Florida? Photos looked okay, and then we got there, and I think the photos were taken like 10 years ago or something.
Yeah.
And we got there, and this thing had more water damage and mold. I think it had sat outside without a dehumidifier for 10 years. I mean, it was green inside.
Right.
Oh man.
Oh my God.
Sorry, buddy. This thing is trash.
So along those lines,
you owe me some gas money, buddy.
Yeah, right.
For as long as you've been doing this, are there any other tips that you would have for people to spot or avoid scams, just in general, when you're buying or selling an RV?
I mean, if you're going to go it alone, then I definitely do your own due diligence. I mean, let's say they're going to pay cash for it. So they don't need me. They don't need the dealer. Here's what you want to do. ID the person, get a copy of the title up front and back, and get a copy of the current registration. So at least you know that all of those three things should represent whoever is selling it to you. And here's something too that you also should be aware of. We do a lot of on the bigger high-end buses, the Newells, the Prevos, the big diesel pushers. We do Montana LLC titling. So you want to be aware of when you look at that title, it's going to be in the name of an LLC. So if you're buying, 30% or chances or 40% chance of the time you're buying a big diesel motorhome, newer, could be financed or titled in a Montana LLC.
Even older. When I bought this motorhome, it was a Montana LLC that I purchased it from.
Okay, so what you have to do is you have to make sure that LLC is in good standing with the state of Montana. You have to get copies of the operating agreement, and you have to get copies of the articles, because that's going to tell you maybe John Smith is representing the RV, but he's nowhere in the LLC. So that's going to be a no-go right there, because he can't sell it. He doesn't, he's not part of the LLC. So you want to make sure that whoever the individual is listed in the operating agreement and in the articles as a member of the LLC. If there's two people, they both have to sign off on the sale.
I had that challenge. I bought this from a guy getting divorced, and his wife was on the LLC as well. So I had to go to the bank, get both signatures, and split the money so that they both got paid. It was a bit of a mess, but yeah, that is important.
And you don't want to get burned on that, So
a high level question: can an RV be refinanced? Like if somebody buys at a dealer or something and they realize it's not really a great deal or something, can you refinance an RV?
Yes, absolutely yes. And a couple of great examples. I've just done a couple of refis. I actually reached out. Right now, rates have come down. Okay, so great time to refi. And I helped this one lady out who actually was in a B van, like we're talking about. It was a Winnebago built on a Ram ProMaster 3500. I forget the exact model name, but it wasn't. I think she paid like 150 grand for it, and she had an interest rate from a dealer at 10.25%.
Ooh, ouch.
And she bought it a year ago in 24. So she came to me, and I said, "Yeah, we can help you." And with rates where they are right now, she had great credit, and we got her. I think she owed like 165 on that thing, and a 10.25. That's
Yeah.
that's up there. And we got her refied at 674, and she's as happy as a clam.
Yeah.
So refi is big
Okay.
for us. And rates. If you bought an RV in 21, well, let's say realistically, if you financed one in 23 and 24, chances are you got a 9 or 10% interest rate.
Mhm.
And if you're on a loan balance of 150 grand or more, there's stuff out there right now in the low 7s to mid 6s where you could refi that loan, and that that's quite a bit of drop in payment if you do that, or
Yeah.
shorten the term. If you're on a
Yeah.
20-year term and now you're sitting at like 18, drop it down to 12 or 15 and get a better interest rate and not
Sure.
really go up in payment. But thank you for bringing that up. God.
Yeah. So
I'm
how
gonna
does
go
that
back
work? Would they come to you then and just give you all of the information about their loan, and you guys basically just take it from there, or like what's involved with refinancing?
Yeah. So we get inquiries all the time, and what we do is we just walk them through, again, like we did, we still have to do a third party collateral verification. We send them a payoff letter for their current lender. We verify the payoff, get a 10-day payoff, and then from them, we just basically get a copy of their registration with a copy of their driver's license. They don't have any money down, usually because they are in a position to refi, with a valuation. Sometimes they have to bring money. Sometimes it's not worth it. You might be, I could save you 1.5 or a point. You got to bring 25 grand to close. That's probably not worth doing. I wouldn't do it. But many people put money down to begin with when they bought, so they're not, as we like to say, upside down. They've got they're in a position where they can do it without any money, and it makes total sense to do it. The only thing that lenders would require is the current loan has to be seasoned for at least 6 payments. So 6 months is what they look for, and then after that, we can do a refi. But it's very popular. In fact, we actually go back through and contact repeat customers when it's time and start looking at refi.
You mentioned being upside down on a loan. Do you see that quite a bit? And like what are some of the factors that lead to that?
Yeah, great. So one big thing is back during the COVID, again, airlines, traveled to Europe, all that stuff was shut down. RVs and boats took off because now people could vacation in somewhat kind of isolation, could go places with their family and enjoy a vacation. Maybe they didn't get to go to Hawaii or Europe. They still had the RV trip. And RVs, as you guys know, were in such short supply. You had supply chain issues. You had a lot of things going on. So people were paying full sticker price for an RV. And if you didn't want to buy it, step aside. That guy behind you will pay for it. And so there is a lot of that, out there you have to work through. The other thing too is just depending on, let's face it, you buy brand new, it's going to depreciate. There's just no way around it. And those boats and RVs brand new depreciate faster than anything, from the first year especially. So if you put down a minimal down payment and you finance it for 20 years and it's brand new, and if it's going to drop. I mean, it's just, nobody would deny that. And that's where you really see it, in that somebody trying to trade out in a year that, put a minimal down payment into the deal. very hard to make that happen unless they want to come back in with more cash.
I think we love this lifestyle. We recommend it to a lot of people, but we always, we do warn people that this is not, it's not an appreciating asset. This is not an investment of something that, we're not financing something that we're going to make money on in the future. We're getting it for the lifestyle that it's going to enable for however long we're going to own it necessarily. But there's a cost associated with that, and it's something that's
a lifestyle. And, it is what it is. There's nothing wrong with that. I mean, cars depreciate, boats depreciate. It's not like, hey, I thought this was going to go up in value next year. And but it's like you just said, it's a lifestyle.
One group of people that we know loves RV are retirees. And I wanted to make sure I asked you specifically about this group, because so many of the things we've talked about with financing and like proof of income and credit scores and all that stuff, like when you retire, my understanding, we're not there yet, but my understanding is that those things kind of change for somebody. So how
fixed income, we're living off investments now, how does that factor into
getting a loan for something?
This is a great question. So let me just say before I answer that, and because I will line this into it, but you should know too, like if you're out shopping for anything more than $250,000, in other words, if you want to take a loan out for more than that, be prepared to have 2 years of income tax returns, a personal financial statement. Most important on the personal financial statement, they want to see what is your secondary form of repayment. A lot of people put jewelry, guns, antique cars. Not as important, not what the banks look at. They want to see what's your liquidity, what are your marketable stocks, cash in the bank, and retirement, to see like if something happened and your income is interrupted, do you have a way to keep paying the loan? So just being aware that when you're out there looking and you think somebody's being a little invasive, if you're looking at a Integra Cornerstone or an Anthem or a Aspire, be prepared to have your financial information ready and available. I would suggest, having it on PDF copy. Most accountants will provide that to you on a PDF. Boom, send it right to the dealer, to whoever you're getting your loan through. It's so easy. And don't let that stress you out, because just know that they're going to ask for it. And then segueing into retired people, great question. So I have a gentleman a couple of weeks ago. He's on a brand new Icon Super Seat, and he's financing $500,000 on, and he's now just gone into retirement. Okay, his tax returns from 22 and 23, he still had W-2 income. He doesn't now. So, wow, what are we going to do? So here's what happens typically, and the way that we can make a budget work and make the income work. First off, you're going to want to have available, if you're retired, all your 1099 income. So proof of your 1099. If you have a VA pension, you have an award letter. Have a current award letter. Have your Social Security award letter, and have any 1099 from pensions for 2 years. So in this case, we're talking 22 and 23. Have that available as part of your income. Next, if you have IRAs, 401k money that is deferred, we're now got to start taking required minimum distributions. Now, really, that even applies before that. You can retire at 65 and you're eligible, or at 62. And in this case with this gentleman, he wasn't at required distributions yet, but he had $3 million from his employer in stock and 401k. His 2023 tax return showed basically nowhere near enough income to support that loan amount. What the lender does is called an imputed income. So now that he's in the age of retirement, say 62 and on, he's eligible to start, taking withdrawals out of his 401k or his mutual funds. So basically, in this case, they took the lump sum, the $3 million, they divide it by 20. And well, they do a percentage is what they did. They took a percentage of that total gross amount, and then they came up on an annualized basis of $150,000. That he may not be drawing that down right now, but he has the ability to based on the total amount of the asset. And so now with his pension, with his Social Security, and with his extra 150 grand that was calculated coming in, his income works and he qualifies.
Gotcha.
So, and one thing also to note, if you're buying a high-end something where you are providing financial information, again, we're talking in that 250 and higher loan amount, they're going to look at your liquidity. They want to see you have enough in the bank to handle 12 months of payments, not just of the RV, but everything you've got going out the door. So everybody looks at it differently, but you want to make sure that I often see times where, people think they're doing great, but they got no cash. They have no liquidity, and they're trying to step out and buy one of these high-end coaches like that. And the lenders have a guideline, and they want to see certain, instruments, cash, marketable securities, things that can be liquid that would help you qualify for a loan that big.
Yeah. So basically what I'm hearing is like, if you're retiring or have recently retired and you're looking at fulfilling the RV dream in retirement, it's going to be a lot differently than maybe if you bought an RV earlier in life. You're going to have to provide a whole bunch of different financial information to basically justify that income that you might not be getting, on a regular basis, month to month.
So we're going to want to see, like, if it's a 401k with Raymond James or Charles Schwab, or if it's an IRA with one of those, you get a monthly statement every month. You can go on to their website. I just did it today, as a matter of fact, because I needed to get a statement, and it's a PDF. Download it. Do not send screenshots because it doesn't have your name on it or your address, so we don't know who that belongs to. So make sure you're using a PDF copy. You can redact the account, and we don't care about that, but we want to see the name and then, confirm the dollar amount.
So Jeff, as kind of like a summary question, we've covered a lot of topics today, but what would you say are like maybe your top 2 or 3? If there's more, you can go more, but like common questions or misconceptions that, like, if you could just tell everyone, before they get into an RV loan or RV financing, what would you tell them?
I think if you're thinking you're going to get into this, and we just touched on it, and not have depreciation, then you really need to stop and think about that, because you are. If you want to mitigate that, and I've been doing it a long time, and I've done so many pre-owned deals, and I've seen the listings, I've seen the low mileage, I've seen all the things on them. I'm going to weigh toward pre-owned.
We would recommend the same, I think.
And that could be from a dealer or a private. It's a personal choice for everybody. So you got to do what's right for you. And some people would never do that. They would never buy that or buy pre-owned. Before you go out there, do your homework, narrow down what you're looking for. Talk to people like you. Talk to other, lifestyle people. Talk to people that know the mechanical part about it. And do I need a diesel? Do I need a gas? What are you doing? Where are you going? If I buy this, half-ton pickup truck, what can I tow with it? People oftentimes they buy way more RV than the truck will pull, and then they got to go buy a new truck. So that all comes under the umbrella of just doing your homework in advance and being prepared. And then don't be surprised if you have any problems with pushback. If you don't get approved because your debt to income is not working for you, or it's out of a guideline, even though you may be perfectly content with paying your bills and having great credit, the lender looks at it differently, and they want to keep that debt ratio in that low 40% range at the high end. So if that's what you want to do, know what that looks like before you go in. Add up and by the way, don't add in your car insurance or your utility bill or whatever. They're not looking at that. They're looking at what is in the credit bureau, like a mortgage payment, car payments, any type of, maybe a signature loan, something that's in your credit file. And that's how they come up with what your monthly outgo is. So, just be aware of what that is, and then buy what you feel you'll qualify for, and then what fits in your budget. And know your credit score too, please. You can access it easily. Remember, we talked about the FICO. Get a FICO version 8 or FICO version 9. So when you go out, if you go out into the dealer world, you should expect to pay a commensurate rate depending on what your score is. And if you have a high, 7s or a high 800 score, then call me, call whoever, but go get pre-qualified at your local bank. They always say, tell people when they buy a car, first thing you do, Dave Ramsey will say this. Well, he'll say pay cash, but Clark Howard, get approved at your credit union first. Doesn't mean you're going to go through them, but, get a rate. Now, that's similar to what I said earlier, because a lot of credit unions don't have great RV rates, but, find a source that you can get a specialty RV finance program and get a rate. I get FMCA people calling me all the time. They tell me they're going to a dealer. I'm like, fine. Let me tell you, I give them, just some pointers on what to look for. What's the credit score? Here's where you should be on rate. Mm-hmm. And so when they sit down, they're not going to pay 2 points higher than that. Yeah. They're going to have an idea of what they're doing. So I believe just knowing and being equipped, I like to say, probably gets overused, but know before you go.
Yeah.
Perfect.
Knowledge is power for sure. Always.
So Jeff, if people do want to give you a call or reach out to Newcoast Financial, what's the best way for them to do that?
So I can give you an email, and it's my name, Jeff, Jeff. McLeod, and that's Scottish. So it's MCLEOD. So Jeff.McLeod, MCLEOD at Newcoast.com. That's NEWCOAST.com. And I'll be happy to respond. If you just want to call and run something by me to see if it makes sense, or if it, if it is a good deal, or you want some advice on where rates are, things like that, no obligation at all. Be happy to help you.
Awesome. Well, I think that's one thing we've loved about just having conversations with you, is that you're open and transparent, and I don't feel like I have to give my driver's license just to look at an RV and then have a. I don't want to use the term necessarily like predatory lending, but sometimes it feels like that in a dealer.
Right. Right. Yeah. Yeah. I mean, like I said, it's just a lot of moving parts, especially, Kate brought up the private party thing. That can be very intimidating. By the way, if you look on Facebook Marketplace, you can find any and every group you want. Used Diesel Pushers Florida, Allegro Coaches for Sale, Dutch Star Diesel Pushers. I mean, you go on, you can name them, and every iteration of that group. And so there is a lot of private. They estimate that the private marketplace, driveway to driveway, could be bigger than retail out in the new world.
Oh, I believe it. Like you said, even the loans are relatively short. People keep them for a couple of years and kind of choose to do something different. So there's a massive marketplace there. I think what you recommend as well with the groups, there's also groups where you can ask questions about something. So like you said, the mechanical, I'm part of a few groups that I'm quite active in answering questions about this particular, this era of Monaco, because I know everything about them. So I'm happy to answer questions. And I think that's a great recommendation to
find a group.
Do your research. Do your research and know before you go.
All right, that's the end of the interview. Thank you so much to Jeff for your time. This was really a ton of great information. And if you stuck with us this whole time, thank you as well, because that's a long video.
And if you have any additional questions or want to get in touch with Jeff at Newcoast, his email is down below in the description and the pinned comments and in the corresponding detailed breakdown blog post over on our website that summarizes everything that we talked about in this interview.
Overall, hopefully this video has made you more confident in the whole financing process and made you more prepared as a whole. As always, shop around, get the information you need, and just be prepared before you go into financing. Don't let somebody push you into something that you don't understand, and please, please read that contract before signing on the dotted line.
Well, thank you so much for watching. If you enjoyed this video, hit that like button, hit that subscribe button for more RV tips and adventures, and stay safe out there. We'll see you down the road.
Bye. Everyone.